Hello and welcome back. I'm your host Kyle. Today's date is August 15th, 2024. Great trading day. Markets and indexes did just absolutely fantastic today. More and more we are getting economic news that is being responded to pretty positively. We're not getting so much of that doom and gloom type news that we were getting just the last week and a half or so. Japan is really bouncing back really hard, and some of their Federal Reserve members have even suggested that there probably won't be any more federal interest rate hikes on their end for the rest of the year. They're trying to avoid some of that extreme market volatility. They know that it is not being well responded to when they cause indexes to plummet over 30% in a matter of days. That is not good for public opinion over on their side. So the situation seems to be handled, at least for the moment, and meanwhile we're just going to continue kind of chipping away at our inflation problem, which seems to be going okay. Now, on Wednesday, data came out for inflation, and it showed that we haven't increased in inflation, but we haven't really decreased in inflation. It came in right where it was forecasted at, so it met the expectation, but we didn't beat it. And I thought Wednesday was going to be the day that markets really moved on upwards, and we did see some positive movement, but it wasn't until today that yesterday's data in conjunction with today's data just gave us the right conditions to really rally hard. So let's take a look at it. First, let me show you the screener map here and look at all of that green. There's a number of companies here that just didn't really do much of any movement for the day, or looking somewhat gray, sitting at negative 0.01% or positive 0.01%, not a whole lot of movement. But we can see the big guys, Amazon, Nvidia, Verizon, MasterCard, a number of different categories. We got the software, we got the financial, we got the auto manufacturers. Tesla did 6.5%, consumer, Walmart did 6.5%. It's looking good. It's looking good. So let's hop on over to charts here, and I got the S&P 500 zoomed in pretty closely at the moment. So these are, again, the drawings that I had been working on for the videos, or during the videos over the last couple of days. And so we're just gonna re-break that down and add on to it. So my expectation was, I saw a little bit of a resistance zone here around the 5380, 5400 zone, and we ended up cruising right on through that. And just prior to Wednesday morning's data coming out, I thought we were going to go pretty sideways, and we did throughout the evening sessions and the European and Asian sessions. Wednesday morning, though, we had a little bit of a dip and rip. Not much crazy action. There was good buying there for a moment, and I will try to zoom in on that here. There was good buying there for a moment, but that rally got snuffed out pretty quickly. Though overall for the day and into the afternoon, it did maintain a decent little climb of altitude. And again, flat into the overnight session leading into this morning. But once we got market open and some more data incoming this morning, wow, it just absolutely popped off. So let's look at some of those numbers, and I want to see what it was this morning. It could have been the retail sales, honestly, being that important of an impacting event. So these are all the events that took place right here in this morning opening market session. So we had the jobless claims came in below forecasted. We had continuing and initial both came in below forecasted. A number of manufacturing indexes, employment. I think retail sales may have been the big one, because look at this change in values that it's had over the past couple months. The prior was negative 0.2%, so a decline in retail sales. The forecast was 0.3%, so just predicting a minor change, and it came in at a whopping 1%. And just look here on the graph how much of a difference that has been over the past geez, even going all the way back to December of 2023. So I think that might explain some of why we rallied so hard this morning, right off, starting strong into the opening session, and then it just kind of faded into the afternoon. Thankfully, it still continued to fade upwards. We didn't really get any relief dips for traders to be able to buy back in at or look to close out their shorts if they had shorts. That would be a painful rally to have to sit through. Now, on a wider scale, it is getting up near some of that overhead resistance that I think might still be a problem. Just because we had pretty good moves today and we've had pretty good moves earlier and towards late last week, that doesn't mean that we're automatically in the clear to continue on upwards towards an all-time high. And I know the all-time highs are close here. Let me, not a 3-day, I just want like here, and I'm gonna remove these drawings now. Not too much more needed at the moment, and we don't need these over here. We are only 2.15% away from an all-time high, so we are rocketing back up. And let's look at the Nikkei here, and we can see even they are doing better. Not as much of a climb, not as strong as a climb, naturally, because this was, now of course they are affected by our markets as we are affected somewhat by their markets, but they have not yet experienced the move that we experienced today. Now their session is still yet to open up here, so they could see some pretty strong buying in their session today following, but they do have some overhead resistance here approaching, kind of like what we are dealing with. And if I go back here, we can see we're above some of those levels that I was more so concerned with. So we're holding above those well. And again, though, we're not guaranteed to be in the clear here. So a little ways to go. I think now that we've had such a good move, an explosive move, it will take even more positive economic data to keep us rallying on upwards. So I am almost expecting to go sideways for a couple days, if not maybe a week and a half or so, until we can get some more impactful event type stuff. Now, there could be a little bit of a bait and switch getting set up here. I try to look at each scenario from both sides, right? You can't just be blind to the possibility of it going down, because let's look back here in July. It was moving very strong. The momentum was good. I'm sure at that time, as it was approaching other resistances over there, it was possibly easy to say we're going up and things are looking great. And I know Japan was involved in some of this down move at that time, but it can happen really quick. It's elevator down, stair steps up. So while we're stair stepping up slowly and little by little, it won't take much for us to slam back down if it comes to that. So just that has to be calculated into your risk assessment, and you just have to plan accordingly. Anything can happen. Nobody knows what's going to happen for sure. So you have to plan a little bit for both directions. So enough of the indexes. The S&P 500 is doing fine. The Nikkei is doing fine. Bitcoin today, I mean, personally, I'm expecting Bitcoin to continue to go down. And even though the US markets had just an absolutely stellar day, Bitcoin did not do so well. It was doing fine up until about mid-morning, and then it rolled on over. And even while Bitcoin's tumbling over, even with ETFs and all of this involvement in the stock market now, and however much they might appear correlated at times, that correlation can snap in an instant, and US markets went up, Bitcoin went straight down. I am expecting Bitcoin to make possibly even a lower move than it already has, lower than this 48,000. We see the 200 weekly moving average down here below. I don't think it's necessarily destined to come down and touch that, but I'm not quite super bullish on crypto yet. I would like to get in lower, and again, I think people with a lot of money, I think bigger money traders, institutional traders, are not wanting to buy at these price levels. And I think they haven't been buying for most of 2024. They're wanting it to come back down to 32, 36, however, somewhere there in the 30s. That's kind of my target range. Will it happen? That's who knows. That's just what I'm planning on. I'm not holding any crypto at the moment because of that. And once it gets in the 30,000 area, I'm a buyer. And if it doesn't get down there, then I'm not buying. Sorry. Let's hop on over to Dell. So Dell, I shared a trade with about just the other day, and I posted it on this Theta Gang website that I'm using to keep track of my trade history, and I'm unable to delete or edit my trades after I commit them. So I started posting some of my trades here just for a catalog of history to be able to not only reflect upon, but also be able to provide to my viewers and have them be able to see some of what I'm doing. You know, maybe just get an idea of what types of trades I'm taking, or maybe they learn something of what to look for or whatnot. So I took a trade on Dell the other day on the 13th, and I think I bought it when it was right around $100, maybe 101, maybe high 99s. I bought a 100 strike call contract that didn't expire until September 27th. I was not planning to hold it very long at all. They have earnings coming up here towards the end of the month, and so I was just looking for a little swing long with a call contract on Dell, and I was only expecting to get maybe about 10%, 8, 9, 10% or so movement on Dell, and the markets were very nice to me. They gave me exactly what I was looking for. I got the first little good movement yesterday. It was up about 2.5%, 4%. If I recall it, yes, 4% or so right there in the morning. I remember considering closing out right then and there once I saw that 4% the next morning, and I thought, hey, that's a good little chunk of free change. I should just capitalize on that. But markets were looking good, and the data from Wednesday was good. So I wasn't expecting too much more issues going into Thursday. Even if the data that we got today wasn't fantastic, I think we still would have maintained kind of cruising altitude, cruising speed, and done okay. Maybe just kicked a little bit sideways, not necessarily gone up a lot or gone down a lot. So I thought, well, let's hold it for another day. And lo and behold, this morning it really took off, and I ended up closing it a little prematurely, maybe around 108.30, somewhere around there. And I was able to capitalize pretty well on it. I ended up taking away $460 on that single individual trade. So the options contract, the call contract itself, was up over 55, 60% or so. I was super happy with it. And yeah, I mean, could I have held it a little bit longer and got a little bit more out of it? Absolutely. But at the end of the day, profit is profit. There's no shame in taking profit. And it's in those moments where I start to feel a little bit greedy that I know I need to close. When I'm looking at the profit on my option and I'm like, 460, I kind of want 500 now. And then it hits 500, and maybe it hits that quickly. And now you're thinking, oh, the momentum's strong. Well, let me go for 520, and maybe that tops out right then and there, and you'll never see 520 and you'll never see 500 again. So it starts to fall back down, and now you're in regret and thinking, okay, well, if it gets back up to 500, then I'll sell. And now you've settled with what was your previous plan that you already abandoned, and it's never going to come back there. You need to just get out of it. So it's when I start getting a little bit emotional, and that takes some time to be able to recognize those emotions as well. I think everybody deals with that differently and has a different learning curve to that. I struggle with it a good bit, at least initially I did. Once I start to get a little bit emotional, it's time to cut the trade. It's time to be done. I had price targets in mind. I said if I got to 8, 9, 10%, I'd be happy with it. It got up between 8 and 9%. It was looking good. It's a very short time frame that I was offered profits within. I took it, no shame. And am I going to get back in it if it looks even more bullish and like it's going to keep running? That's a different trade for a different day. I mean, maybe I would much rather just move on to another symbol though and take a different strategy or a different trade with a different company. And this one was a great trade. It worked out very well and I'm happy with it. So take what the market will offer you, but do not demand from them. Stumbling over my words here. Do not demand from the market. If you demand from the market, you will get punished for that. The market is not just this infinite pool of money or dollar bills growing on a tree that you can just go and yank from and take from whenever you like. You have to play a part of the system. You have to both lose and win. You have to give and take. But when something is being offered to you through the markets, take it respectfully. Don't accept it respectfully is maybe the words I'm looking for. When you start getting into that take mentality, that's that greedy emotional drive. That's that like, I deserve this money or this profits because I'm a good trader, or I deserve this because I drew up this technical analysis and it's going my way and so it's mine. That's not how the market operates. That is not how this field operates. It's all just data driven. It's risk analysis. It's risk management. If the market says, if I got in a trade on Tuesday and the market just back to back has great, fantastic days, that's a gift. Take that gift and don't waste it, because the moment you start to get greedy and emotional about it and tied to it, you're going to get hurt and it's going to drive you nuts. Ask me how I know. I have been burnt many a times, hopefully enough to have learned my lesson pretty well for the future, but we're all human at the end of the day and there will be mistakes, I'm sure. Again, I can only do my best to not make those mistakes. So I logged those trades, and let me refresh here. I even made some more trades post that. I took those proceeds and I then went on to buy 10 shares of Dollar General, DG, and I bought another share of Carvana. So let's look over here at Dollar General, and also had a pretty good day today. I liked the buying that I saw going on here. Now they have been trending downwards for some time, and this is not one of those 200 weekly moving average trades. We can see they're far below it. In fact, we can see where they even touched and tried to maintain above it before really breaking down pretty strongly back in early 2023. So this is not a 200 weekly moving average play. If anything, maybe a play towards moving back towards the 200 weekly moving average, but this is more of just how I saw it was an upcoming earnings play. It's a little bit resistant to some downward market turns if the market does roll over in the very near term. So it's a little bit protected in that it's less correlated than some other stocks such as Dell might be. And I'm looking to just get a very similar move, very slow, consistent growth here towards the earnings. I think I may even hold through earnings, but we will see how I feel closer to that. So I'm looking for at least a number of percent here. I'd like to get kind of back up in this category with these other peaks here. I'm looking at that as some overhead resistance. So I think I'd like to see it kind of get back up towards there, maybe high 120s, low 130s, and then evaluate if I want to still be in it from there. And there was another one that I want to, Carvana. So I got in this trade starting the other week when they had that absolute blowout earnings. It was fantastic numbers that they got from their earnings report. Really good future guidance was also released. Their breaking above and sustaining above this 200 weekly moving average that I talked about in prior videos as well. And even though that they were trending up all this time in the past, I didn't determine that the trade was right for me until just now. And if conditions are right, I think it can continue on upwards. It's not like just because it has risen from $3.99, which is insane, just at the beginning of 2023. That is insane. I cannot believe it has risen from $3.99 all the way up to $130. That is a monster move, but that does not mean that this is the top and that it can't keep going, right? So zooming in, it has been doing pretty good from day to day. Yesterday was a little bit mixed, but that's all right. So my overall entry by now is probably about 134. It was 133.68 before I bought another share today. So that probably brought up my average just a few cents. The entry that I had today was 150.63. So that certainly brought up my average, probably a good 50 cents or so. But yeah, it's doing fine. And this one might be a little bit more correlated with indexes if we see a turnover. But otherwise, I think if we are on our way back towards all-time highs with indexes, then I think Carvana will be a performer. So not trading advice, not financial advice. I know I've been on a little bit of a trading video binge over the last couple of days. So I hope this variety in content has been a little bit more entertaining or maybe informational and educational to y'all. Maybe you can tell I can speak much more fluently about trading and charts and analysis and all that type of stuff than I can about some particular news events. Unless it's the Fed, I can talk about the Federal Reserve all day long. Yeah, so I think that's all I have for today. Thank you all so much for watching. If you've stuck around this far, then I hope you are a subscriber. Please hit that bell down below if you want to see more content like this. There will be much more coming. So again, thank you, and I will see you all later.